Alright everybody, Stocks by the Numbers, welcome back. Wanted to do a quick update here on Plug Power Incorporated, ticker symbol PLUG, listed here on the NASDAQ. Stock right now, touch below $3 a share, down about a quarter of a point, 7.5% on the news that they recently got about 1.6 billion from the DOE, and now supposedly that is being investigated, and I'm assuming potentially those funds are on hold. But we can see that just a couple of weeks ago here, it was May 14th, I believe, we had a big pop-up. Stock ran up basically to this fib, almost hitting about $5 a share, and then of course pulled back to this fib here, and then chunked down below the 20-day moving average, and of course this fib level of 304 on the news of the delay slash investigation. But overall, in my opinion, I have to say, unfortunately, I appreciate the fact that this administration is still pushing towards the whole like green energy and everything like that. But at the end of the day, we have a company here that is just bleeding too much, in my opinion. And I'm sure if they do get that grant, 1.6 billion, again, I'm sure the stock will, run back up to 5 if the investigation goes away, and everyone will potentially start piling back into the stock. But it seems like quarter over quarter, it is just slowly going to inevitably give it away. As we see here on the bottom of the screen, we have nothing but a sea of red here with earnings going all the way back. August of 20 was the last quarter here that the EPS actually beat. And since then, they have been posting wider than expected losses and very, very inconsistent revenue, in my opinion. So we were looking at the stock, and we were in this kind of like this long-term, almost looked like it was a little descending wedge here, just this long-term consolidating channel. And I drew out a couple of green arrows here because I was kind of predicting that the company would eventually come in line with some of these numbers and they would be able to kind of pop out of this wedge and show a little bit of life back in the stock. And as we see here, very nice beat on the revenue side, posting over $250 million for this quarter, beating estimates by over 9.5%. But they missed on the EPS side by 50%. And then the next quarter, they missed on the EPS side by over 50% again, and then missed on the revenue side by almost 10%. 2 quarters ago, another huge miss on the EPS side, losing over $1 a share on estimates of just a loss of 37 cents. And the company misses revenue again by about 5.5%. And now last quarter, in my opinion, really dismal. Really dismal here. And of course, the losses again continued to widen, but now the revenue basically fell off a cliff, and revenue comes in at about 120 million for the quarter on estimates of 157 million. So now we're in a situation where not only is it costing more than $1 to make $1, but now we could also potentially say that maybe the hype is done and the revenue is not steadily coming in and growing as it was. Now we have a market cap of about 2.2 billion. And if we look at the balance sheet, if we look at the actual equity of the company minus their debt, plus the revenue that they brought in last year, we could potentially make the argument that we should be sitting maybe at about $4 plus at quote unquote fair value. But the problem is, in my opinion, the losses are just way too wide here. So market cap 2.2 billion, we're still losing over $2 a share. You can see consistent EPS misses here by 40-50% on average. Annually, though, the revenue has been growing nicely, right? 300 million, 500 million, 700 million, up to almost 900 million. But as you see, the more revenue that they generate, the more it costs them. So we can see here that in 2020, we had a net margin percentage of minus 91%. Then it accelerated to over minus 100%, meaning we're losing over $1 for every dollar that we're generating, right? Then we switch over to 2023 and we can see, yes, revenue jumped from 700 million to about 900 million, but it cost almost 1.4 billion to generate that 891 million, meaning it's costing about $1.50 for every dollar that we're generating. And this is almost not necessarily similar to something like a DraftKings, but kind of in that same realm, right? What happened with DraftKings? As they started generating more and more revenue and they started narrowing that gap, that's when the stock price actually began to chunk up and really start to gain momentum. And what we're seeing here is kind of the inverse, right? So again, not to go back to a name we looked at, which I do mention, but Luminar Technologies, right? LAZR. Same thing. This is what I mean when I say that if a company is going to steadily lose $1.50, $2 for every dollar that they're making, it almost has to drop down. And then we had the catalyst with the 1.6 billion, and then we immediately dropped and gave it back due to this investigation. So more importantly than that, though, if we switch over quarterly, we can see that last quarter, 120 million in revenue cost them almost 300 million to generate said revenue, with a net margin percentage of almost minus 250%. And if we look at Q1 of 24, again, 120 million revenue, year before, 210 million revenue, and they lost 206 million to bring it in, right? So a little less than $1 for every dollar. And now, a year later, the revenue is down almost 50%, but the losses accelerated by about 50%, going from minus 206 million to almost minus 300 million. So in my opinion, this stock is just not heading in the right direction. And it's unfortunate, again, because if we pull up some of the numbers, we can see things like the book value is actually higher than where the stock is currently trading. I believe book value is about 4.25, but it has been consistently dropping. We have assets outweighing liabilities in both the short and long term, so that doesn't really seem to be an issue. Debt jumped up to over 900 million here, hitting 970 million, almost 973, down to 968, down to 950. So even though it has been slowly pulling back for the last couple of quarters, it is still, about 40% of the current market cap is debt right now. I will say, though, interestingly enough, the free cash flow sitting here at minus 266 million, this time last year was minus 417 million. However, the company also had about $500 million in cash, and now it has been coming up the last couple of quarters, but we're sitting here with about 392 million in cash. So we have a couple of green flags here, but overall, in my opinion, it really does just seem very, very negative here. Steam friend, my apologies. I always forget to sign off. But here we can see, right? Look at the Q1 comparison here, right? 210 million in revenue cost them almost 280 million. Gross profit, right? Revenue minus cost of goods sold yields gross profit. Gross profit minus 69.4 million. Now we accelerate to this last quarter, Q1 of 24, and we can see that the revenue dropped from 210 to 120. Cost of goods almost identical, minus 279 million. Now the gross profit accelerated, excuse me, the loss on the gross profit side accelerated by almost 1.5 times here, sitting at minus 159 million for the quarter. And minus the quarter before, which of course was dismal as well. These are the biggest negatives that we've seen going back the last 7 or 8 quarters. Gross profit minus operating expenses yields operating income. And you can see we were at, minus 150, minus low 200s. Now we're at the minus high 200s and even minus high 300s here 2 quarters ago. So in my opinion, it's probably going to get worse before it gets better, which is why they randomly issued, this $1.6 billion grant. That's the way I'm looking at it anyway. But here we can see the assets also have been slowly trickling down here quarter over quarter, going from the high 5 billion mark. Now we're at the high 4 billion mark. So total assets are down about 20% here over the course of about the last 18 months. Liabilities are up almost 20% actually over the last 18 months, going from 1.6 now up to 1.9, hitting 2 billion last quarter, slightly coming down here quarter over quarter. And the equity here was almost 4.25 billion. Now we're sub 3 billion. Technically, we did go up 0.03 billion here quarter over quarter, but we're still sub 3 billion. And of course, the debt is holding this 900 million mark in change. And the book value has taken about a 40% drop here over the last 18 months, we'll call it, going from about over 7.25 a share. Excuse me, very dry today. Going from about 7.25 a share down to about 4.25 per share. Right? So this is why, if we look at it at the quote-unquote fair value, we could make the argument, hey, listen, the stock's at 3, we could potentially go to 4. Understandable. understandable. And on the percentage side, I mean, we're talking about a 33% move. And of course, the options would probably move a little bit more than that. So we do have the potential to ride a little bit of a pop here. But in general, I was expecting it to pull back to that trend line, I believe, in the low twos, and that's exactly where the stock ended up going. And it hit new lows of about 2.25, and it looked like it made that double bottom and then tried to gain some momentum. But in my opinion, I actually think it pulls back to that trend line. We have equity here, we'll call it 29 billion. Total debt 900 million, right? So that takes off from there. So we'll call that 2 billion. And last year the company generated 900 million. So now we bring that back, right? If we add that, equity minus debt is 2 billion. Plus annual revenue brings us back to 2.9 billion. But they lost almost 1.4. So now, in my eyes, that brings the quote-unquote fair value, the way I'm personally looking at it, down to about 1.5 billion, which, as you see, is significantly lower than the 2.22 billion market cap we're currently sitting at, which is why I'm saying, in my opinion, this stock is more than likely going to pull back to the low twos, potentially even sub 2, before maybe gaining some momentum again. And it's unfortunate because I drew out some of these arrows of where I felt that we were kind of getting closer to this apex here of this pattern, and we were going to potentially see a rise. But unfortunately, the company just keeps disappointing. It almost reminds me of STEM, if you think about it, right? We looked at STEM, we're forecasting out 1, 2, 3 quarters down the road of when and where the stock was going to potentially pop out if they posted good numbers. And what happens? They kind of keep posting light numbers. And that's exactly what we're seeing here with Plug Power. So unfortunately, we're in a situation now where, like I said, in my eyes, even if they get that 1.6 billion, it may only delay the inevitable. And if we go back to some of these statistics here, we can see we're trading about 2.5 times sales, which is the lowest it's been over about the last 7 or 8 quarters. Price to book, again, only 3/4 of book value. Book value right now about 427. The enterprise value is almost 3 billion, even though, as you see here, was back at 10 plus billion. So this is why we've really lost a lot of value here. All of our return percentages are down big. Our gross margin percentage was sitting here at minus 30% in change, drops to minus 69, hits that minus 100 mark, and then drops by over 30% since last quarter to minus 132%. The operating margin percentage, same thing. We were sitting here at less than minus 100%, trying to close that gap, and then we accelerate to minus 130, 160%. Now last quarter, minus 218%. The EBITDA loss increased by about 33%, going from minus 155% to about minus 205%. The only thing that saw a little bump here was the net margin percentage, going from minus 300% almost to less than minus 250%. However, that is almost double the loss that we saw here 2 quarters ago when we broke below the minus 100% mark. The inventory turnover has basically been consistently dropping now. This 1.6 is the lowest it's been going back about the last 18 months. The asset turnover was slowly climbing. Now it kind of dipped down the last quarter because the company technically is generating more revenue off of said assets on its balance sheet. The problem is it's costing even more than it used to, right? So if these losses are going to accelerate, regardless of how much revenue that the company can potentially bring in, then in my opinion, I mean, this is just a sitting duck potentially just waiting to get picked off. And I know people, again, they may look at it as very cheap, and they do fuel cells, and it's a green energy stock, and they just got the grant, so I might not know what I'm talking about, and maybe the stock rockets back up to $6, $7 a share. Those of you who've been involved in the stock for a while, you who've been following me as well, I'm always wishing you guys the best of luck, but we do have to call it like we see it. All of our debt ratios have been increasing for the most part quarter over quarter. The company doesn't pay any dividends, right? Of course not. But we haven't beaten on the EPS side in 2 years, as you see here, even longer. But again, we're just looking back here the last 8 quarters, and we can see that these are big misses as well. Right? If a company beats on the revenue side here, like we see here, 260 million on estimates of 237, phenomenal quarter, right? But on the loss side, we can see a loss of 40 cents on estimates of a loss of 27 cents. So the problem is when a stock like this, in this current state, it's going to continue to take a hit if the EPS loss is not even in the ballpark of what analysts were expecting, right? So if they beat here on this revenue number, hypothetically, and let's say they posted a loss of like 29 cents, 30 cents, right? 30 cents still would have been wide, right? Because you would have missed by about 10%. But missing by 10% is better than missing by 50%. I mean, the best miss was here with a loss of with a miss of 25% below expectations. But on average, you can see here almost 32, 45, 50%, 50%, 54%, almost minus 200%, minus 40%. So they're missing by a mile. This isn't a stock that, again, is generating kind of consistent, close inline revenue, but they're missing by, a cent or two each quarter on the loss side. So they're kind of like trying to do their best to narrow these losses. No, these losses are rapidly accelerating what analysts are expecting. And we looked at annual numbers as well. And the company, even out to 2027, looking to generate, supposedly forecasting roughly 3 times more revenue for the year than what they brought in for 23, and they're supposedly still going to be operating at a loss out in 2027, which is why I always said, in my opinion, this stock is more than likely going to continue to trend downward before it potentially bottoms out and they get those losses in check. And we looked at it several quarters ago, and as you see, we technically really haven't missed much because the company keeps posting these big losses. If we switch over to the annual side, we can see, look at this, going back to 2016, the only time the company beat on the EPS side was 2019. And then they haven't really been able to dig out of this hole that happened here in 2020 and moving onward. Even though supposedly, these orders were supposedly going to come in and everyone's trying to go green and this company offers, phenomenal things and whatnot. And also remember that the stock got pumped here with the stimulus money in 2020 and 2021. And also, I believe Robinhood was giving out free shares of Plug Power. Right? So everyone was, so everyone was piling into this stock a couple of years ago and took it to the moon, $50, $60 a share. And then it has just been consistently dropping for about almost 4 years straight now. So we really don't know where the bottom of the bottom is, in my opinion. That's the point I'm trying to make. But even on the revenue side here, people want to highlight these big quarters and these growths in revenue here. But again, this time last year, 210 million. Last quarter, 120 million. Now Q2 moving forward. Look, estimates sub 188 million. This time last year, 260 million. So unfortunately, I have to say again, I personally do not see urgency to own this company. And we could make the argument, again, book value north of $4, the stock's at 3. Isn't it a buy? Yeah, I can understand that. And yes, of course, if this investigation goes away and they get their money, then the stock is going to rally again, could potentially go back up to 5, where it was. But again, in my opinion, I just think the losses are too heavy, and I think the risks outweigh the potential rewards, which is why I'm saying we might see the low 2s, potentially sub 2, before we gain that momentum and could see a run back up to the 5s or the 6s. So the company beat only 2 quarters of the last 8 quarters on the revenue side. And if we look back here annually, we can see, again, technically growing nicely over the years, but only 2 beats on annual revenue numbers over the last 8 years. And we're supposedly forecasting nice growth here moving forward. As you see, 929 million, almost 1.4 billion, 1.85 billion, and then 2.78 billion by 2027. That is technically phenomenal growth on the revenue side. That can't be denied. But we're expecting to go from sub 900 million to 2.8 billion almost, right? Tripling that number. And if we look on the EPS forecast, we're still expecting to lose 3 cents a share in 2027. Now, granted, we could potentially reevaluate the situation, in a year or so, and some of these numbers could become more in line, and we can be looking at a much more valuable situation going out, looking out until 2027. Maybe starting 2025, I don't know. Right now, it's all up to the company. But even if we look at a lot of the segments here, we have some increases on the hydrogen infrastructure, cryogenic equipment. but also the fuel cell systems, which supposedly is their bread and butter, right? We can see has actually been slowly, consistently dropping, looking like by about 10% year over year. 225, 207, now down to 181. Now, other segments are growing very nicely, as you see here, going from about 28.5 million up to 82. So this is why I'm saying, I appreciate the fact that some people may still be bullish on this situation. But the company itself does not seem very sustainable in the current moment. And this was the line I drew out last time. As you see, this was the bottom of this drop here back in basically when the lockdown started. That was March of 2020. And I said, in my opinion, that's probably where the stock is going to go. And then, we were dropping here. We were kind of channeling. I mentioned this resistance level it has to get above. As you see, multiple rejections. It had the big drop. It comes down below the line to 226. Then it spikes all the way back up to 5 and then immediately gives it back and drops all the way down to new lows of 225. Tries to get back above that line. The news came out, and then, of course, the investigation came out, and supposedly these funds are now delayed a little bit. So we can see, let's see here. Yep. Government watchdog has been called upon, leading Senate Republican, to examine the recent $166 billion financing extended to Plug. Conflicts of interest and risks to U.S. taxpayers, right? Because they're basically just printing money for whatever they want to do, right? We now have our eyes open. Most people do anyway. And, again, they're seeing people like Nancy Pelosi somehow outperforming Warren Buffett. I mean, this guy has been doing nothing but the market since he was like 11 years old. I mean, the guy's got like 85 years of market experience and is the most successful investor in American history. But yet somehow this politician, Nancy Pelosi, is outperforming him. And why are all these politicians making millions and tens of millions without breaking a sweat? Well, it's because they're basically on the boards of all of these, oversight committees and whatnot of the publicly traded stocks that you and I are trying to time. So, of course, when someone like Pelosi takes a position in NVIDIA or Palo Alto and then, makes it their business to pass a bill to send funding to those companies, of course she's going to make money and the stock's going to go higher. So that's why I'm actually happy to see that this has actually taken place. And again, I'm not trying to keep any of you Plug shareholders down. But at the end of the day, as we just looked at the numbers, the company does kind of suck on paper. So to randomly give out $1.66 billion, this is what I mean. We're just printing billions and trillions and just handing it to these, crappy stocks and these crappy companies. And it has to stop. It really does just have to stop. Quote, given the significant financial implications and the need to maintain public trust, a thorough investigation into the LPO's conditional commitment to Plug Power is essential to ensure transparency and accountability within the LPO. Conditional commitment by guarantees to construct up to 6 facilities. I don't know why. In my opinion, I wouldn't give them $1.66 billion, but that's just me. Quote, earlier this year, Plug successfully demonstrated our innovation and technical ability by launching the first commercial-scale green hydrogen plant in Georgia. The loan guarantee will help us build on that success with additional plants. I don't know. Right now, like I said, perhaps I don't know all of the information, but the way I'm looking at it, if your existing plants aren't generating consistently increasing revenue, and your revenue is down 30-40% from where it was this time last year, I just don't see how building more plants will accelerate this growth. Okay, Senator urged the agency's Inspector General to scrutinize, quote, any potential impropriety by the program and its director. The report noted the company's shares initially soared, reflecting its significant for growth plans, but they have since retraced much of those gains. Expressing concern. Here we go. Senator highlighted the relationship between Shah and a Plug Power lobbyist purportedly described as Shah's, quote, long-term friend, right? See what this is what I mean. This is the tale as old as time when it comes to America. It is no longer the best of the best in a position and only the strong survive and capitalism at its best. That's not what this is about any longer at all. It is complete, it's not even nepotism. It's really gotten to a point where it is no longer what you know, how good you are at your job, what you can bring to the table. All of that meritocracy is now off the table, and it is not what you know, it is who you know. So, as we see here, basically rubbing shoulders here, rubbing elbows, if you will, whatever the expression is, but rubbing elbows here with a lobbyist. I mean, So, of course, the loan comes through. Sometimes you just have to see the writing on the wall here. He also questioned Plug Power's financial stability following a reported loss of over $1.3 billion in 23. So they gave him a loan for over $1.6 billion, and that's almost how much they lost in 2023. That's the point I'm trying to make. So even if they take the loan and start to begin construction of these new facilities or whatever the heck they're doing, in my opinion, inside of 6 to 12 months, that money's going to be gone. And they're probably going to need more money. So this is what I mean. What are we going to do now? Just start throwing $5-10 billion into this company's hole, just hoping that they can, climb themselves out and just figure it out in the numbers over there on their end? It's been years they haven't been able to figure it out. And again, I still say, regardless of what you want to say, if Robinhood wasn't handing out free shares, and if the government didn't hand all these young investors and traders all of this free money, no one would have been piling into this company, and it wouldn't have ran from $3 to 65 or wherever the hell it went. Quote, it also appears that Plug Power only resolved its November 23 going concern warning in March of this year. Quote, such significant losses raise questions about DOE's prior decisions to provide Plug Power with tens of millions of dollars in grants, as well as DOE's conditional commitment to provide a $1.66 billion loan guarantee. As Republicans target the loan program. Yep, failure in an election year. The letter underscores their scrutiny. Hundreds of billions of dollars. Here's a couple of ETFs that are holding Plug. Yeah, I don't know. In my opinion, I just feel like they're scrambling over there in this current administration. And again, also not to get political, but I know there was also news, Biden talking about an executive order to now attack the border crisis. It's been 3.5 years, and in less than 6 months, based on how I'm personally seeing the public outrage here, it seems like Trump is going to win in a landslide, right? So now all of a sudden, it's like the country was down and you kicked it while it was down. And now, with less than 5 months to go from today's date, all of a sudden now you're trying to sign an XO to fix the border. And now you're trying to hand out billions to all of these companies to, do your little green build back better or whatever the heck the freaking plan was. But you're giving it to dying, suffering companies. In my mind, none of this is adding up at all. And if we see the writing on the wall, we can probably all come to a similar conclusion saying, hey, in less than 6 months, this guy might know that he's about to get the boot out of the White House. So now he's just trying to get a couple of things on record showing that he, started to do a couple of things. And now, everyone's talking about Trump again. I need more time. No, granted, you had a decent amount of time. You had a decent amount of time. But at the end of the day, again, this is why I always say, in my opinion, you're better off following the revenue, follow the growing companies, right? Don't look at the companies that are struggling. And I know it's boring, and I know it's slow, and I know you might not buy a call today and make 2,000% tomorrow. But if we look at a stock like SB, Safe Bulkers, yet again, hit a new 52-week high today. As you see, the stock is up 2.75%, sitting here at 632. Originally brought to you on this channel at 325, and then dipped down into the twos after we looked at it. So everyone could have had a cost basis of around $3 a share, potentially less. And now you guys would potentially be up over 100% return, and you'd be getting paid a dividend to own it. Now, again, I understand we're talking about a longer term hold, but this is what I mean. This is why if we go back 12 months ago and you ask me, oh, would you, buy shares of Plug or would you buy shares of SB? Yeah, the answer is going to be SB. Because both companies have growing revenue, but the difference is SB is actually generating profit. And again, Plug Power is losing now almost $2, more than $2 as of last quarter for every dollar that they're generating. So that's why I'm saying, again, to bring it home for the nth time, because I know I said it a bunch of times in this video, but if you give this company $1.6 billion, the stock probably will go up to 5, 6, and then it will eventually come all the way back down to 2, because it just doesn't seem functional here, in my opinion. And it's like, it's basically like betting on the worst horse at the track, just hoping that, a miracle can happen and they can pull it out and you can make a serious return. But in my opinion, I wouldn't touch this with a 10-foot pole. And I'm sure all the shareholders are going to dislike the video, but we have to call it like we see it. RSI was climbing. Now it's back below middle of the road here at 47.5 on the daily. Stock spiked up, couldn't get to the 200-day moving average, and immediately gave it back, trying to bounce here off the 50-day moving average. We got about 30 minutes to go, so we'll see where it closes. But in my opinion, probably going to pull back there to about 260, bottom Bollinger Band. On this big drop here, it looks like the MACD potentially crossed to the downside after it was rising up here off of this news for the last couple of weeks. So this is why, again, I'm saying, in my opinion, we may see 260, potentially 2.5 and lower. On the weekly side, RSI 42.25 was slowly coming up. Now it might pull back with this investigation. The stock has been consistently rejecting, for the most part, off the mid-Bollinger Band, going all the way back to 22 and into 23. And again, we had that recent news, and then we immediately gave it back. So, I mean, if you're holding the stock, I wish you the best. I hope it pops to 5 randomly, and you guys could make yourself a couple of bucks. In reality, this company more than likely, in my eyes, is going to go back to the low 2s and potentially make new lows. MACD looks like it's still above the cross there, but if we do drop the next day or two, that could potentially cross to the downside and accelerate the losses. Let's switch over to the pivot points. This video is going on for much longer than I wanted it to, but we have to make sure we look at a little bit of everything. 50-day moving average here on the daily, 296. Stock right now trying to hold $3 a share. After the pullback, it tried to run back up and rejected off the pivot point here of 3.5. And now, what was this old pivot point here? About 269. Bottom Bollinger Band was 261. And next support level here looking like 211. In my opinion, that might be the next stop. It might go to 211 because, again, it was pumped about the 1.6 billion, but now because it's on hold, it has to resume the path it was on. You understand? So that's why, again, in my opinion, right now, Plug Power, I really wouldn't be a buyer. And again, if you guys try to time the bottom and it goes from 2 to 5, of course, more power to you. I'm happy for you. But in my opinion, it really doesn't seem worth owning. And I don't know. I know someone asked me as well, oh, could you do a comparison between stocks like Fuel Cell and Plug Power? And I don't know, guys. Honestly, these companies are operating at big losses. The revenue is inconsistent. And even when they randomly get a grant for over $1 billion, now it's an issue. And I don't know. In my opinion, it just doesn't seem like a decent investment to me. But I'm going to end it there because I spoke for way too long. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.